trade war between the US and China has had an unintended consequence: the rise of Vietnam. Well, since 2018, US imports from Vietnam have more than doubled, reaching $114 billion last year. This surge coincides with a near-perfect correlation between the increase in Vietnamese exports to the US and their imports from China. Data suggests that Vietnam is acting as a middleman, assembling goods with Chinese parts for the US market. This strategy has helped Vietnam capture over 60% of the market share lost by China in key US imports like textiles and electronics. However, Vietnam's success story comes with a caveat. The country now It boasts the fourth largest trade surplus with the US, exceeding $105 billion in 2023. This imbalance could raise concerns in Washington, especially after the upcoming elections. While Vietnam has benefited from the US-China trade spat, its reliance on Chinese components raises questions. Around 80% of the value of Vietnam's electronics exports comes from Chinese parts. This dependence on China exposes Vietnam to potential future US trade actions against them, especially if the perception is that the Vietnamese exports are simply a way for China to circumvent tariffs. Additionally, the US is probing Vietnam's trade practices in solar panels and cables. These probes, coupled with Vietnam's position as a leading source of US shipments, rejected due to concerns about forced labor in China's Xinjiang region. It suggests a potential shift in US-Vietnam trade ties. While Vietnam seeks market economy status from the US, its ballooning trade surplus that could lead to increased scrutiny. The risk of additional tariffs or trade barriers hangs over Vietnam, especially if the US deems their practices unfair or a way to undermine US-China trade policy. As for China, it seems to be able to work through the sanctions thanks to its strong hold on the global supply chain.